Are you ready to navigate the financial markets of 2026?
Today, we're diving into insights from renowned analysts Joseph Wang, Emily Brown, Andy Schectman, and David Lin, experts who truly understand the pulse of the market.
We've transformed their hours of analysis into quick, AI-powered summaries designed to help you grasp critical information fast.
Buckle up as we uncover what to expect from silver prices, predictions for equity markets, and the impact of artificial intelligence on finance.
Let's get started with Joseph Wang's take on rising treasury yields and their implications for investors. Today, we're examining insights from Joseph Wang regarding the challenges confronting equity markets.
Joseph highlights significant risks posed by rising treasury yields and their impact on investor sentiment.
Joseph Wang stresses the importance of understanding how rising treasury yields exert pressure on stock valuations.
He notes that sustained inflation could reduce consumer spending, further influencing the equity markets. Joseph explains that an increase in treasury yields raises the borrowing costs for companies, potentially diminishing earnings.
As a result, this higher cost of capital typically lowers stock prices, creating a cautious market outlook. Joseph notes that ongoing inflation could shift consumer spending habits, affecting overall growth.
As inflation ramps up, discretionary spending typically drops, presenting challenges for equity markets.
What does Joseph Wang expect for equity markets in the coming year?
Joseph predicts a potential correction of 10 to 20%, indicating that volatility will likely persist as economic factors evolve.
Joseph advises investors to closely monitor indicators such as treasury yields and inflation to navigate uncertainties.
He underscores the importance of adjusting investment strategies to counter market corrections and volatility.
Today, we're analyzing the recent trends in silver pricing, according to Emily Brown.
Emily illustrates how various factors are driving the dynamics of the silver market.
Emily points out that increasing industrial demand for silver is a major factor driving prices.
She notes that macroeconomic instability prompts investors to seek alternative assets like silver. As Emily discusses, economic challenges can make investors more cautious.
Indeed, there's often a flight to safety, with commodities like silver being favored. Emily notes that silver's role in technology and renewable energy is strengthening its market position.
So, it's not just a safe haven, but also an essential material for new industries.
Exactly. This dual demand could further elevate silver prices.
What does Emily predict for silver prices in the coming months?
Emily predicts that if current market conditions persist, silver could see a significant price increase.
Emily advises investors interested in silver to keep an eye on global economic developments.
Absolutely. Being informed about market trends can lead to better investment decisions.
With informed strategies, navigating these shifting markets could offer substantial opportunities. Today, we're diving into market risks as discussed by analysts from Reventure Consulting.
The analysis warns of potential slowdowns in the builder sector, emphasizing the need for vigilance.
The Reventure Consulting analysts underscore that builders should be cautious about expanding their investments in this volatile environment.
They highlight that recent economic indicators suggest a possible correction, urging builders to reconsider their strategies.
The analysts discuss signs of an economic slowdown that could affect the construction industry.
They note that rising costs and potential interest rate increases could lead to fewer housing starts.
According to the insights, it's crucial for investors to reevaluate their strategies in light of these market challenges.
They recommend focusing on sustainable building projects as a way to navigate potential downturns.
Looking ahead, the analysts predict a slowdown in new construction projects by 2026.
They warn that if current trends continue, significant corrections in property valuations might occur.
In conclusion, it's vital for builders and investors to stay informed about economic indicators.
Adapting investment strategies to focus on resilience can help buffer against unforeseen market shifts.
Today, we're exploring the silver market with insights from Andy Schectman, providing an expert perspective on recent developments.
Schectman emphasizes the dynamics at play in the silver market, particularly regarding supply constraints and potential price volatility.
Andy Schectman states the silver market is facing significant challenges, primarily due to demand outpacing supply.
He believes these challenges could lead to a reevaluation of silver prices in the near term.
Schectman points out that constraints from mining operations are a primary concern for silver pricing.
He notes that as demand increases, especially from technology sectors, these supply issues become even more critical. Schectman suggests that investors view silver as a hedge against inflation amid current economic uncertainties.
He urges investors to consider short-term market fluctuations alongside long-term investment viability. What does Andy Schectman foresee for silver pricing in the near future?
He predicts that if supply issues are not resolved, significant price increases for silver may occur in the coming months. Schectman emphasizes that investors must closely monitor the dynamics of silver supply and demand.
He recommends diversifying investments into precious metals as a safeguard against economic volatility. Today, we're reviewing insights from David Lin on the explosive growth in the semiconductor market and rising oil and gas prices.
David highlights the pivotal role of technological advancements driving semiconductors to new highs, alongside the recovery in energy sectors.
According to David Lin, semiconductors are experiencing unprecedented growth, with demand significantly outweighing supply.
He also notes the oil and gas sector's gains driven by global economic recovery and growing energy needs.
David Lin emphasizes that the demand for semiconductors is at an all-time high, fueled by technological advancements in various industries.
This surge is reshaping market dynamics, offering considerable investment opportunities.
In his analysis, David indicates that the oil and gas markets are seeing a resurgence due to rising global demand.
He highlights how these trends create new opportunities for investors looking at the energy sector.
What predictions does David Lin provide for the semiconductor and energy markets?
David forecasts sustained growth in semiconductors as technology becomes increasingly integrated into everyday life.
Additionally, he expects the energy sector to thrive as economies rebound.
In conclusion, David Lin suggests that investors should strategically consider semiconductor stocks due to their growth potential.
He also emphasizes the importance of monitoring the oil and gas sector as it strengthens in reaction to global economic recovery.
Today, we are discussing valuable insights from our guest regarding the risks tied to the rapid growth of artificial intelligence in financial matters.
Our expert sheds light on the pressures evolving in the market due to AI technologies and their associated financial risks.
The guest expert highlights how the surge in artificial intelligence technologies is contributing to serious financial risks.
This evolution indicates a change in how businesses manage financial strategies in today's technology-driven era. AI advancements are influencing industries and resulting in significant shifts in debt levels.
As more companies adopt AI, the potential for market volatility rises.
The expert indicates a worrying trend regarding a debt bubble in tech industries, warning of potential corrections.
Given the reliance on debt, any setbacks could lead to broad economic repercussions.
Looking to the future, the guest expert shares thoughts on how AI might influence economic stability.
The expert warns that without robust debt management tactics, the intertwining of AI growth and rising debt could trigger economic disturbances.
In conclusion, it is essential for stakeholders to be vigilant in observing the shifts in AI and managing debt risks.
Grasping these dynamics will be crucial for investors and policymakers to steer clear of future financial turbulence.
Wow, what an insightful discussion we've had today, don't you think?
Absolutely. From AI risks to the semiconductor boom, our guests really covered a wide spectrum.
Right? It's clear they all emphasize the need to keep an eye on those economic indicators. But what was surprising to me was their differing takes on market corrections.
Exactly. Joseph Wang sees potential immediate corrections, whereas others suggest a more gradual approach.
And it seems everyone had something to say about silver investments. Andy Schectman and Emily Brown both highlighted supply constraints.
It's fascinating that while they agree on the issues, they differ in their strategies on navigating those challenges.
Absolutely. It makes for an enlightening discussion. If you enjoyed this conversation and found it valuable,
make sure to hit that like button, subscribe, and share the video with your network.
And stay tuned with us for future explorations into market dynamics and how they might affect your investments.
Thanks for watching. We can't wait to bring you more expert insights.